Are you a U.S. taxpayer who has children? Well, there has been a small update on the Child and Dependent Care Credit. My name is Paul Vasquez with Tax Lab, and you need to become an ethical millionaire. Now, if you don't have children, this doesn't apply to you. You can scroll on your merry way. However, if you have a dependent care person, a person who is dependent on you to take care of them regardless of their age, this might still apply. Now, while the update is a small one, I did take this opportunity to review the dependent care credit, and I found some pretty interesting things. Now, the credit is still $3,000 for one qualified dependent in the household. We'll call them a qualified dependent for this. If they are a child, this is 13 and under to be a qualifying child. To be any other person, you have to be disabled. A disabled person that doesn't have the physical and mental capabilities to care for themselves. So they have to kind of qualify for that, and you have to be the one who's taking care of them for more than half the year. So you have to be the one taking care of them for that time period. And of course, you have to be the one paying for it. It has to be your taxable income that's paying for the expenses. That's the whole reason for the credit. You don't get credit for somebody else paying for it, for someone else being the caretaker and paying for the caretaking. Also, to qualify, you need to either have a job or be working or be looking for a job. And they say that you need to have wages for the year that you're claiming that credit. Of course, if you're married filing jointly, hopefully one of you has that job. Now, here's the interesting part. Let's take a look at the IRS's website, irs.gov. So what are qualified expenses? So let's take a look at amounts you paid for household services and qualified care of persons. Household services, that's interesting, right? So that's not just child care, so to speak. Right? It says generally if you worked or actively looking for work, or if you're a qualifying student, it gets into that. So if you are a full-time student or taking classes and you're single and have need of these services. So check this out. This is kind of interesting here, right? These are the services needed to care for a qualified person as well as to run a home while you work or look for work. They include, for example, services for cooking. So if you hire a chef or somebody to cook food for you, maid, babysitter, of course, housekeeper, cleaning person. If services were partly for the care of the qualifying person, right? So partly for the care of however, does not include chauffeur, bartender, or gardener. So there are more services that could be considered part of this care credit. So you got to have the dependent, right? 13 or below, or caring for somebody who's physically or mentally disabled. And of course, you've got to be paying for these types of services. Now, there are some specific forms that you would want to have to back this up. And here's one more interesting thing. So who can be doing this work, right? So the care, the person providing the care, right here, the person providing the care wasn't your spouse. So you can't The spouse can't be charging you for that and you get the write-off. The parent of a qualifying child, right? So if you're not married, but they're still a parent, a person who can claim the child as a dependent, if your child, excluding stepchildren and provided care, they must be 19 or older by the end of this is 2024 tax year, and they can't be your dependent, right? So if you have an older adult child who's no longer your dependent at 19, that means they can't be disabled one way or the other, but they are providing care for the child and you pay them. Now you can write that off. But once again, you need to have certain forms to back that up. You can't just make a claim of that, and you'd probably want there to be some due diligence on the other side of that too. So you'd probably want them to follow through with paying their taxes, or at least submitting a tax return that reflects the related income, because you're going to be submitting certain forms on this, and or they might need to submit some forms. So there's kind of a how to do this. So these are the rules. The how to do it is something different. Now, I would imagine that these other services would also be in that same category. The cooking, the cleaning, the I think that was like the main two, wasn't it? Cooking and those are the main two. So long as one of you is working and you paid an adult to do this work for you, or an unrelated child, then this could qualify you for the credit. So remember, this is a non-refundable credit. That means it just reduces your taxes. So it is a credit. It doesn't reduce your income, but it is a credit against taxes that you owe, but it can only get you down to 0 taxes owed. Now, if you've made some payments along the way through your W-2 or whatever, and you are able to reduce your taxes to 0, you get the refund of the money you put in. But you can't, with this alone, get more money out. It's only going to reduce the taxes that you owe at the end of the year, or to offset what you've already paid for in taxes, just because I think some of you need that explained in two different ways, because not everybody understands taxes the same way. So I'm trying to phrase it in a couple different ways for you. Now the update. The update has to do with the limits. So that's what's been updated, is they actually increased the limit in one area. So I will show you in writing what it says on the IRS website for 2024 and what the new rules say. So right here, there is a limit. And so if you earn $15,000 or more, it begins to reduce how much this is. The new rule says each $2,000, it's going to reduce it by 1%. So it kind of follows this old rule here. But let's pull up the bill, and right here, it's saying not below 35%. So until you get up to 75,000 or 150 per person, then it's not going to go below 20%. The old rule was 43,000. So they bumped that up for, I suppose, inflation. So what was 43% is now, 43,000 is now 75,000 for single or head of household, right? And then that's limited to up to 20% of the credit you're allowed. If you want a plan for you, Lab Tax Advisory Services, and I can show you how to